Hey guys, how's it going? I'm gonna go set up this room real quick and then we can get started with our group mentoring session. So let me just get this down right here. It's good. Solid. All right, that's good. So let me get this link sent out to you guys here in the premium as well. All right, cool. Link is posted. Give a few minutes for people to make their way in and then we can get started. All right, I'll give it a few minutes for people to make their way in. It's a minute from 1, so it's still a little early, but we'll allow people to make their way in and then we'll wait a bit for questions to come in. So if you guys have questions, go ahead and drop them in the chat. If you guys want to ask them out loud, you guys can do that as well. Just let me know so I can unmute you. But it's probably best to just type it out so that I can read it out so that everyone can understand your question and then we can cover everything in detail. So if you guys have any questions, feel free to ask. And yeah, this session is pretty much open to whoever has questions here. This session will probably run for about an hour, maybe longer, maybe shorter, just depending on how many questions we have. If we don't have any questions, then obviously we'll end it a little bit early, but I'm going to hang around for as long as we need to get these questions knocked out here. I was looking for some trades today. I actually took I don't know if I even posted. Yeah, I did. I posted my profits there. I took one trade there. I missed a couple here that I was looking at actually. I was trying to sit in the market and try to catch them. There's actually like quite a bit that came up here. I don't know if anyone else caught these trades here, but I was sitting on the charts for a bit today after we got off. I probably should have just stayed on the live session, but it was okay. I was pretty much just sitting here waiting for trades. I missed a lot of them actually. I was answering questions in the group, but I did see quite a bit of entries here. So if you guys have questions, feel free to drop your questions in the Zoom. I'll go over every single question you guys have. I'll try to knock out all of them by today so that you guys can go and test as much as you guys need to over the holidays. But yeah, let me check if there's anything here. Hey, Randy. Randy said, mind going through them, I bailed. Sam said, caught my first variation trade a few minutes ago, but then missed another 2 more. Yeah, it was moving pretty quick. Yeah, I mean, if you guys want to do that, so Randy wants me to go over the trades that I missed. So what we'll do is we'll go back and we'll just look through the session and see the ones that I missed, and then we can just go over anything in specific. So if you guys have any questions, drop your questions. If there's anything that you guys need me to cover, regarding any of the strategies, any of my checklists, stuff like that, I'm here to help you guys out. I want to make sure that you guys can become, the best trader that you guys can be and as consistent as possible. As you guys can see, I haven't been taking many trades, but I haven't lost any trades either. So main key here, guys, is consistency, right? You don't have to take every single trade and you don't have to trade every single day. So other than that, let's see. Professor said, good day, Sean. I'm challenged with consistency. I'm losing far more than I would like. I'd like to start with a high-low strategy as that appears to offer the most trading opportunities. So another thing with that, Professor, more trading opportunities doesn't necessarily help with your problem. Your problem is consistency, right? The thing is, if you have a lot of trade opportunities and you're taking all the bad trades, it's not going to make your consistency any better. Your consistency is going to be based off taking quality trades, not one that appears the most. So that's something to keep in mind. We'll go over the high-low strategy, but you got to keep in mind that that's not the main thing that you should be looking for. You should probably be looking for multiple entries off different strategies within K2. So like, for example, I usually look for momentum entries that are tied with the high-low entries and with the pivot scalps as well. So like, for example, here, there's a intraday momentum entry right here, and it's also a pivot scalp. So if you took that trade there, I mean, obviously you'd have two confirmations there and a straight push to the upside, little to no drawdown. But I mean, there's different things, there's different ways you can do it. So let me see if there's anything else here that I'm missing. Okay, I think that's it for the questions right now. So let me just make a list here. So the first thing we're going to go over, and I'm going to go over these in order. So I can probably knock out the professor's question, which is regarding the high-low strategy, with Randy's question to go over the entries that we missed for today. So I'm just going to put questions right here. Review entries post live session. So I'll do that. I'll review the high-low strategy as well. So review K2 high-low strategy for a professor. Sorry guys, every time someone joins the room, it's gonna make that little thumping noise. Professor Randy. Let me see if there's any questions here. So what I'm gonna do first is I'm gonna make a list of all the questions so I don't miss any questions here. And then we'll make sure to go over these as we continue through. Okay, so Randy said I found my stop loss had to be 35 or 30 stopped out way too often. That's why that's because of my broker. Gotcha, Randy. Yeah, sometimes your broker will have a really wide spread, so you might need to have a wider stop loss in some instances just to incorporate that spread, especially if it's past the New York session. So like right now, I wouldn't take any trades from like 12 until now. So for example, here, all these trades right here from 12 until now, I wouldn't take any of these because it's so choppy. That's one red flag. Another red flag would be that it's at the London high. So the London high, New York high, Asia high, it's in this whole area right here. That's not really a good area to trade because you're going to see a lot of rejections, a lot of spikes when price reaches those price points, the previous session highs. Other than that, let me see if there's anything else that I need here. Yeah, exactly. Sam said a lot of entries for multiple strategies in this last hour. I agree. There's a lot of volatility because a lot of people are pulling out of the market before the holiday tomorrow, right? This is why I stopped trading after the live session, was because I anticipated the market to be a bit choppy as we get close to the holiday tomorrow. So you guys just want to be careful, especially like for one, it's a holiday. For two, it's just in an area where there's a lot of previous session high lows. So there's going to be a lot of areas where you see a lot of rejection points. So that's why you see a lot of volatility here. People are pulling out, people are buying the dip, people are buying the discount, you know, stuff like that. So there's a lot of red flags, like I was mentioning before. You know, one red flag, the holidays tomorrow. Another red flag is the session high lows. Another red flag is that the market is closing. So for one, I generally don't even trade around this area from 2 to 130. That's when the market closes. Depending on your broker. I think FTMO closes around 120. So it's 106 right now. The market's probably going to close in about 15 minutes or so for FTMO. So it's just not a good time to enter trades. Other than that, let me see if there's any other questions here. Noel's asking, for the high-low strategies, do we need to run? We just need to run the winners and cut the losing ones? Not exactly, Noel. I'm not sure where you're getting that from. I've never referred anyone to do that. That's how you get greedy and you blow accounts. You know, that mindset that you have, Noel, where you think you're supposed to let, because the thing is, how do you know when to let winners run and how do you know when to cut the losing ones? The thing is, if you have that mindset going to trades, you're going to cut every trade or you're going to let the wrong trades run. So, I mean, like, for example, if you let, so for your first thing here, you're mentioning just needs to run the winners. The thing is, if your trade is a winner and then it reverses on you, then you would have just gave up on that win and you would have went straight into drawdown, right? So it's not as easy as you make it seem. I know, and you know, we've discussed it before where you have issues with your consistency as well. So I wouldn't go in with that mindset, Noel. These strategies are here for a reason, right? These are scalp strategies. If you want to go for long-term trades, then use a long-term strategy or use an intraday strategy. But if you're trading on the 1 minute, you come in with a plan. If you start just letting trades run or you start cutting them too early, you go off track, right? And that's how you start to lose trades, because it's all about mindset, guys. If you guys don't come in with a plan, you're not going to do well. Obviously, you're never going to do well because you're going to keep changing it up. For some days, you're going to let them run. For some days, you're going to cut them too early. And the days that you cut them too early could be the days where you can just be, locking in some more wins. So no, I think you got to go back and just like build on that mindset part of things, because we've had a conversation about that where your main goal, your main problem was that you don't feel like you're doing things properly, and coming with that mindset, it just confirms that. Other than that, see, David said Thanksgiving honey-do list kept me. Yeah, no, definitely, David. I know a lot of people are busy for Thanksgiving, so that's why a lot of people aren't trading. And it's probably a good thing that you sat out today, David, because I know you've been doing pretty good with your consistency. So today was a bit of a risky day if you decided to trade throughout the session. So I'll add that to the list of questions for today. Well, I'll just go over, I guess we can probably go over consistency, David. David, sorry, with Noel. Consistency. But Dad said, I tried variations. It was awesome in this pattern. It was amazing. Yeah, so I'll show you guys the variation as well. It's not one that I necessarily want you guys to really be focusing on because it is a risky strategy. But if you guys do it properly, you can easily lock in a lot of profits applying that as well. So we'll go over that. Let me just add that to the list right here. Add variation. And one other thing here too, Randy said, good point. Scalp versus intraday, been mixing the two, which has not produced great results. So that's exactly what I was just referring to. So thanks for bringing that up, Randy. So Noel, just like with what Randy said here, if you're letting them run, you're turning these scalps into intraday trades, right? And the thing is, you don't know when they're going to turn into intraday trades. Like for example, if you have a good buy here, or I'm going to show you, I'm looking for a bad example here. So like for example, right here, if you took this sell here because you saw that it was a pivot entry, and then for whatever reason in your head, you thought, oh, this is going to be a runner, so I'm going to let it run, right? There's so many red flags here. There's a red flag that it's at the Asia low. There's a red flag that I think the bias was bullish as well around this time. So for example, if you were to let this run, say you would have hit your TP right there, right? And then you got greedy, no, because this is like textbook right here. You get greedy, right? You see price drop right here. You could have pulled out in profit, but in your head, you're like, oh, I'm going to let this one run because it looks like price is going to come down. So at this point, if you let this run, because this is a trap right here, right? It's a clear trap. You could have pulled out twice. You could have pulled out right here, full TP. Again, right here, you could have pulled out, but in your head, you're like, oh, this is a runner. I'm gonna let this run. If you let this run, look what happens next. Complete reversal on you. And that's how you blow accounts, because you don't have a plan set in mind. Like when you take these scalps, you have to go in with a plan. That's why we have requirements there with TP and stop loss, because you want to pull out of these trades when you're supposed to pull out of them. So this is where you go into, not just you, but in general. And I've been in this situation before where you start going into a downward spiral, right? The thing is, like, for example, right here, you let this, so this happens right here, and then you get stopped out, right? And then you're like, okay, I don't feel good. I'm going to start cutting my trade short. So for example, down right there didn't hit, and then you have another entry right here. What happens here? You're already discouraged because you lost this trade because you made the mistake of letting the trade run. At this point, you let this trade run, or you think about cutting it short, right? Because you're going in without a plan. You go in, and then it gets close to TP there. And then what happens at this point, right? You get discouraged because it's supposed to hit TP right there, and you cut it short, right? Because you don't have a plan. And then after that, look what happens here. It goes straight up to the top side. So that's why you have to go in with the plan. If you plan on holding the position, letting it run, then do that for every trade. You can't switch it up, because if you switch it up right here, this is a clear example where you would have screwed up, right? You would have taken big loss here, and then you wouldn't have had a win here because you would have cut it too short. So, what I do recommend is, like, once you have a plan set in place, do it every single time. Don't switch, like one day you're moving your stop loss and profit, and then the other day you're not doing that. Because the thing is, you need to focus on repetition and consistency with your trades. If you're going to lose consistently, lose consistently. If you're going to win consistently, win consistently. You can't go from having a winning day one day, and then you change your strategy the next day and you have a losing day, and it just keeps it just keeps adding on, right? Because you're never going to be successful doing that. And that's why I trade everything rule based. That's why all of our strategies here have specific requirements, because that's what you follow. Like I'll put the requirements here for the high low. So the high low right here, right? Things never change. These requirements are always the same. When it reaches TP, I pull out, and that's why we have consistency here, right? That's why my profits here are, they're pretty much consistent if I let the trades run to full TP. These profits prior were smaller because they were Asia session, right? So I go for half TP there. This is New York session. It's all full TP right there. So it's about 1,000. If you look at my profits from the day before that, let's see. So these are all Asia session, right? They're all Asia session. They're under 1,000. If you go to my profits from, see the week before that, see how these are all like under 1,000? These are all Asia session profits. If you look at my other ones here, I forgot where my other ones were. Like this, right? These are all over 1,000 because these are all during New York session. They're all running the full TP. So, one thing that you have to keep in mind is that you have to stick to your plan. If you're going to move your stop loss in profit, move in profit. If you're not, if you're scalping, you're not going to move your stop loss in profit. But for the bigger moves, then you'll be moving your stop loss in profit. Other than that, let me scroll up real quick. Yeah, and Sam also confirmed that Fed was speaking at that time around 11, so I wouldn't even take any trades during that period. But if you were, you always have to stick to the plan, whether there's news going on or whether there's anything else going on that's affecting price. Next question here is from David. David's asking, what about using TP1, TP2, et cetera, to catch continuing moves? You can do that if you're going for the bigger moves, David. So like, for example, if you have an entry here off the 1 minute, and then you have a daily right here running as well, then yeah, you can let the trade run longer than you normally would. But then your strategy is changing, right? Because you're going from the 1 minute to the 10 minute. At that point, you're no longer looking at the 1 minute. So these requirements don't matter anymore. You're switching to the 10 minute. And that's where you can move your stop loss and profit, because you're going for a bigger move. Like if you're using the daily, you're going for 1,500 pips. Like for example, right here, this was the daily from today. And it's still currently running. So for example here, just like we discussed, so this entry came up at 8 o'clock. If you had an entry here at 8 o'clock for the 1 minute, which we probably did. Let's see. Yeah, okay, so like 8 o'clock right here, right? You had an entry. So if you're tying these together, so for example, right here, if you're taking this on the 1 minute and then 10 minutes could run by, right? So this is a 10-minute mark right here. At this point right here, you either take your TP or you hold on to it because the 10-minute here closed out as, a daily entry. So if you're to do that, at this point, you're no longer, let me just clean up these charts real quick, delete this stuff. So going from the 1 minute to the 10 minute, that's where you can let the trade run. And that's where that's different circumstances where you can move your stop loss and profit, because David's question here is using TP1, TP2 to catch continuing moves. So for example, here, if this here moved up, then at that point you can move your stop loss and profit, right? But if you move your stop loss and profit here, you're probably going to lose all your profit, because if you do that, you can see our price comes up and then it comes right back down. So it's got to be your choice, right? Whether you want to go for the bigger move and be a little greedy, especially during a day like this where you probably shouldn't be greedy, you gotta take responsibility for the move. Like for example, if you move your stop loss and profit and then you get out at break even when you could have gotten out at full TP right here, you guys just have to accept that you took that chance there. For me personally, I wouldn't have taken that chance because I already know the conditions in the market. I know the market's choppy today. So for me on this 1 minute, I would have taken the trade and accepted my profits. That's pretty much what I did earlier today. That's pretty much where I locked, well, not the sell, but the buy prior to that. I'm just taking the trades out and I'm going on the short time frame. But yeah, if you want to do it that way, David, you can do it. However, it's not one that I would recommend, right? If you want to enter on the 10 minute, I would stick to just this strategy here. I wouldn't bounce from the 1 minute to the 10 minute to the 3 minute, because that's what people do. And what happens is you get confused with your entries there, or you get confused where your stop loss is, where it's supposed to move. So like, for example, if you wanted to enter here, take one with a lot size for this specific entry. And then you can take a second entry off the 10-minute, and then you can just let that run as well. Because you can have multiple positions running, you just have to lower your lot size so that you can handle the risk for both of them. For me, I don't like mixing up positions like that. I prefer to have separate positions. So for example, here, if I have this running, I'm gonna let this hit, and then I'm gonna get my 1,000 profit off this trade right here, right off the 10-minute, off the 1 minute. And then if I see that close on this 10-minute, then in this situation, I would open a second position. So you don't have to like put all of your risk into one position. If you plan on taking multiple positions, you can take like for me, I take a 10 lot for my scalps, right? I take a 10 lot. If I plan on taking this and I'm like, okay, I want to take the daily too, what I'll do is I'll just half my lot size. I'll take a 5 for here, and I'll take a 0, and I'll take a 1 lot for the 10-minute. That way the profits will balance. So I think that's another thing that a lot of people need to work on as well. Because this is what I see too. I see people take 1 minute and they'll take full lot size, and then they'll go to the 10-minute and they'll take another full lot size. So they end up blowing their account because they're over leveraging heavily. So if you're not at that level, I don't recommend you guys do that as well. You guys should definitely, be focused on one or the other, or else, you can really risk blowing your account, taking too many trades and over leveraging your account. Let me scroll down real quick and see what else I'm missing. Sam said, I always set up I set a TP. The only time I let it run a bit is when multiple strategies line up. And that's exactly what I would do too, Sam. So that's like the same thing that I mentioned earlier with this 1 minute. If it lined up with the 10-minute, then you can possibly let it run. But during a day like this, I probably wouldn't do it. If it was like non-holiday day or non-holiday week, I probably would. But in this situation, I probably wouldn't. Other than that, let's see. Henry said, can you cover some Forex trades? I mean, if you can give me a specific thing to look at, Henry, because we have a whole watch list here, so I'm not sure what exactly you want me to look at with regard to Forex. If there's a pair that you want me to look at, a specific entry, anything you want me to analyze, yeah, I can analyze it. But it's got to be a little more. Okay, so you want me to look at Euro USD. I'll take a look at Euro USD as well. I'll add that to the list here. Henry for Euro USD analysis. All right, perfect. So we'll add that to the list there, Henry. I'll get to that shortly. David said, okay, I like the smaller moves, the in and out, keep it simple. Thanks, Sean. Yeah, definitely, David. I'm the same way with you, especially during conditions like this. Market's too choppy. So the last thing I want to do is hold on to a trade too long, and then it ends up hitting stop loss like an hour later, right? When you could have exited in profit. So it just depends on you guys, right? I like to scalp. If you guys don't like to scalp, I don't want to force scalping on you guys. You guys should be focused on intraday or swing trading, because the strategies work all across the board. It just depends on your trading style. But I can show you guys examples for whatever trading style that you guys want to trade. Jennifer's asking, is that 1 minute you're showing a daily? Jennifer, I'm not sure what you're referring to there. Is that 1 minute you're showing the daily strategy on it? Sorry, Jennifer, I'm not sure what your question is. Are you just joining the room, Jennifer? Because we were looking at a 1 minute here. Well, so which trader? You said the trade you were showing. There's no daily strategy for the 1 minute, Jennifer. So I'm trying to figure out what you're referring to. Jennifer said the trade you were showing on the 1 minute from this morning. The entry that we were looking at was a 1 minute entry. I was explaining how it ties in with 10 minutes. So for example, there was one that was running from like 8 o'clock to 8:10. So like this is the 8:10 right here, right? This is a 1 minute entry right here. However, this entry for the 10 minute came up at 8:10. So there's no daily entry for the 1 minute. This is a 1 minute. Every strategy is different. None of these are like linked together. It's just that this overlapped with a 10-minute entry here. You get what I'm saying, Jennifer? Yeah, and I think because I know that a lot of your questions are like really like you're getting confused with the strategy. So if this is confusing you, just forget about everything I just said right now. Don't mix any of these together. I was just explaining to who was I explaining to sorry, I forgot what I was explaining it to, but I was explaining it to a couple. I forgot who. Sorry. One of the members here was asking like if I ever let it run. And the situation where I would let it run is if it lines up with this. So for example, if this hits TP, or I mean, this would have hit TP already before it even came up. Say, for example, the 10-minute came up before it hit TP, because this is a 10-minute candle right here. This I would have been pulled out in profit already. But for example, if this was to close below here and this trade was still running, then I would just follow it with a 10-minute. But that's like a little more advanced. So I don't recommend anyone who's like not already comfortable with like the basic strategies to let the trades run like this, because this can be really risky if you let it run longer than necessary. Other than that, let me see. Oh, gotcha. Yes, Jennifer said got it. Thought it was the same strategy on a different time frame. Yeah, no. Every strategy is specific to its own time frame. It was just a little different because we were just saying how sometimes people let trades run, which is possible. It's just becomes a little more risky. So, like for example, here price would have pulled back super heavily, and you'd be in some heavy drawdown. So I personally wouldn't have done it. But if it was a different day where market was moving a lot smoother, then in some situations I would probably let it run. Give me 1 second, guys. I'm gonna step away for 1 second. I'll be right back. All right, guys, I'm back. So let me see the other question from Rye. Rye's asking, can you explain how to have your watch list set up? It's pretty organized. So Rye, it says set up your watch list like this. You can download my watch list on the website. Let me see if I can pull it up for you guys. Let's see. All right, so if you go on the website, just log into the K2 course, and then on the course, sorry, they've changed like everything on the website. I'm trying to figure out how to open this up. All right, here we go. Okay, so this is what the course looks like. So you just gotta go on the course Rye, go to K2 watch list, and then you can download it from here. When you download it, just go over here and click export. And then from there, you can, or sorry, import. And then when you click import, you can click on the file and then it'll upload to your watch list there. And that'll be the K2 watch list. So if you want to do that, it's pretty simple. All right, guys. So I think that's it for these questions right here. Let me go down all the questions. Let me just go down here real quick. The first question was from, yeah, no problem, right? First question was from Randy. He wanted to go over the entries that I missed during post live session. So let me just go over here real quick and mark up the 8 o'clock. So I got off around 8. So there was like, I'm going to take this one here. So I started looking for entries like around, I forgot what was going on around this time. There was something going on when I logged off. And that's when I stopped looking for trades. So let me just check real quick the calendar. Today at, yeah, so we had crude oil inventories. So I didn't really look for trade until like 9 something. So like this area right here, I didn't trade because crude oil inventories came out. And these are the couple ones that I missed over here. So here's one of them that I missed. I'll just draw clean everything up. I'll draw a horizontal line right here and a horizontal line up there. And I'll try to knock two birds with one stone. So like, for example, right here, let me just show you this one. This is going to be an example of a variation. So I saw that some people were asking about the variation. So basically for the variation, it's pretty much similar to the high-low scalp, except it's like super, it's super risky, but it's also super simple. So like basically you're identifying the high and you're making sure that you get like a double rejection, a double wick rejection. So for example, here, this would be the variation for a sell because you got the high established here and you have a double rejection right there with the following candle. So if you're looking for the variation here, you take a sell. And this isn't a strategy that I'm openly going to teach you guys because I find it to be super risky. Generally, where I would put my stop loss, we don't have a set stop loss for this, but I usually put it slightly above the high. So like, for example, I put the stop loss right there. TP would be somewhere around this area as well. And if you let it run, usually hits it really quickly. So this would be an example of a variation. This is one that I missed, one that a couple of traders here took along the way. But one that I would be necessarily looking for would be the high-low scalp. So looking at this right here, I'm basically waiting for price to break and close past the previous swing. Right here, we have the swing low. And the reason why I would take this variation was because when we got off the live session, the bias was still a sell, right? So bias was a sell. I was pretty much just looking for sell. So I saw variation here. I probably would have taken it if I was paying attention, but I wasn't. But technically, that'd be a variation entry. And then again, right here, I'm looking for price to break and close past its previous swing. The first requirement, you want to confirm the previous swing by confirming 4 or 5 candles have passed it to establish. So this low right here, there's been 1, 2, 3, 4, 5, 6, 7 candles after, meaning that this low here has been established. So with that said, this would be the low. Second requirement, we just want to make sure that price breaks and closes past it, which this candle right here did. So we have requirement 1, requirement 2 met. Third requirement, you want to confirm you're trading in the direction of momentum. Right here, we have a sell signal. I do see a lot of people try to apply the strategy without the K2 indicators and they end up losing. That's the reason why, because you're not confirming all of these requirements here. It's going to be nearly impossible for you guys to confirm all these requirements because you need the high-low indicator. Plus, you also need a momentum indicator to identify this. So with that said, we have requirement 1, 2, 3 right there. You want to confirm price is not ranging or consolidating. Right here, price was in a range and it was consolidating. However, price broke below it, so it's no longer in that range. So with that said, you just want to confirm that this price point was not touched prior. So before this candle breaking, closing past it, there was all these candles here and none of them touched this low, right? With that said, you can enter on the open of the falling candle, which would be right here. And with that said, you would let it run to 10 pips and full TP right there immediately right after. So that's one of the ones that I kind of missed. One reason why I wouldn't have taken this though, because this is what I noticed after as well. I saw this drop here, but I wasn't really paying attention to the previous session lows. This is one reason why I probably wouldn't have taken this even if I saw it, but I did see it after and I was like, oh, that's a really good high low, but I would have considered it risky because of the session low right there. So that's probably one reason why I probably wouldn't have taken it, but it was one that I did see as price was going along. Let's see if we could find another one here. So with that said, there was one right there. And then let me see if there's another one that comes up here. The high was right here. Let's see if this one over here as well. So right here, this low right here would have been invalidated because price touched it. That would invalidate the 5th requirement because it would have touched it prior to it breaking, closing below it. Let's see if we could find another one here. So again, right here, another variation. I did see that a lot of you guys were looking for variations here. I think Beded caught this one right here. Same situation, right? We have a low established right here. It's double wick rejection. With that said, you could have taken this for a long position. Stop loss would have been like a little bit below the low. And then right there, full TP off that. So that's probably the one that you took, Beded. There was 2 right there that we just looked at. There was one variation here, another variation right there. Both hit pretty nicely. This low right here got established again. Another high right, another low right there. So low, high. Price broke below there, so invalidated it. Lows moved a little bit lower. This one got invalidated by this one, pending high right there. This is the new high right here. Okay, right here. This would technically be an entry off this. However, it's close to this Asia low. So I don't know if I would have taken it if it broke past it. It's really too close, right? Right there. So I probably wouldn't have taken that trade there. But it would have hit, right? So like I showed you, there was an entry there. However, it's not one that I necessarily would have taken. There was a high that was established here. 1, 2, 3, 4, 5. 5 candles past it. This established as the high. You can see that candle right there broke above. That'd be an entry using the high-low scalp. We have a buy signal right there, indicating that momentum swing to the upside. It broke out of this range, and this would be another entry that could have been an okay entry, but due to the fact that it was so close to the Asia high right here, it's not one that I necessarily would have been inclined to take because I don't like taking risky trades like that. But if you did take it, you can see that it still works out perfectly fine. Other than that, this would have been, so no entry off that. This right there would be another variation. So you can see right here, if you took the variation off this, this would have been another hit. So there was a high right there. Double rejection off that that high. Take that for a short. And then another full TP right there. And this is why you guys can't get greedy, right? When it hits TP, you got to pull out because price can just reverse on you right away, just like it did right there. But yeah, there's a couple examples there, Randy, to see which trades that, I kind of was looking at, but they weren't necessarily ones that I was really sold on, right? That I would want to take because they're still risky. Let's see if we can look at a couple more here as we're going along. Let's do this. This was touched right there, so that was invalidated. And this was another one. This is one that I wanted to take. I was like sitting here eating breakfast, and I was like, man, I was like literally waiting. So I was talking to Jeff. You guys probably know Jeff in the group. I was talking to him, and I was literally waiting for this to break above. I was like, man, I can't wait for this thing to break above because it was past the Asia low. This is the one that I actually really was waiting for. This is the main one that I was waiting for. So I was waiting for this to break above here because I was sitting here just waiting. And then the market just started going slow. So I was like, okay, I'm going to take a look away from the charts. I was like watching YouTube videos. And then it was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 10 candles. And this thing broke up here. I literally was texting Jeff. And then I missed this entire move because this was exactly what I was waiting for. This candle. And then if I took it, obviously full TP right there. I totally missed that move. So these back here, Randy, I was looking at them, but I didn't take them because, we were looking at the same thing. It was at the session highs. This one was so out in the blue where I was like, okay, this is exactly what I'm looking for because we broke past this and I totally missed it. But this is the main one that I missed out on. But as you guys can see, there was a ton of entries that were available, right? There was like 2 variations, like 2 high lows and then another high low right there. And then on top of that, we had a couple other entries here if you wanted to line them up with the other strategies. But yeah, I think that's it for right here because it got close to 10. And then at that point, I was like, okay, market's probably going to slow down a bit. It's either going to reverse or it's going to move a bit irregular because it's getting close to market close. So that's it for those entries right there. Let me get to the other questions because I don't want to waste too much time going over these previous entries. But you guys get a gist of like what we were looking at here. So let me scroll. Let me scroll up real quick. Sorry. Scroll up over here. So Jennifer is asking, is a London, Asia, New York session high lows? You have part of one of the indicators. Yeah, Jennifer. Yeah. It's the one that we've been using. It's K2 sessions high low indicator, Jennifer, for this right here. So I'm not sure if you didn't know that, but it's the one that we've been using pretty much every day. It's like one of the main indicators. Like for our trades, this is like one of the main indicators. Momentum is the main one, and the high low. So those are pretty much the main ones we use, plus K2 pivots. But I use the session high lows on everything. That's pretty much how we are able to identify where risky moves are happening. Because pretty much all these lines here that are horizontal, it's the K2 sessions high low. So not sure if you missed it, but that's the same one that we've been using pretty much every day. It's its own indicator too, Jennifer. It's not part of one of the indicators. It's like its own indicator. It's a K2 sessions high low. Other than that, let's see. David's asking on the double wicks, the highs or lows must always be equal to not crossing. Jennifer said she was marking it manually. Oh man, it's a lot of work. That's why we created the indicator, Jennifer, because it was I was doing the same thing. I was doing it manually, but you know, every time I trade, guys, I'm looking for ways to make trading more efficient. So whenever I see things that I can do to make things more efficient, I just create an indicator for it. So every day I was drawing these high lows myself manually, just like you were, Jennifer. And I was like, man, this is taking forever. So I ended up creating this indicator, which is a high low. Same with the other high low indicator. I was doing this manually too. But the problem with doing this manually is that, you know, your eye probably will see things differently from how I see it, especially if you're not familiar with drawing high lows. So that's why I created this indicator as well. Because I was doing this manually myself. And then I was like, I might as well just create an indicator to do it so that we can, you know, take out all the guesswork. And that's pretty much what the indicators do. They take out all the guesswork and give you pretty much the raw data that you need to execute these trades. Other than that, let me see if there's anything else here that I'm missing. So yeah, back to your question, David. David said on the double wicks, the highs and lows must always be equal, not crossing the pivot line. That is correct, David. So for example, like this right here, right? This would be a double rejection right there. One way that you can make sure that it's like exactly there is you can use this magnet tool. So if you use this magnet tool, you're going to turn it on, just click on the horizontal line and go to the low and just click on it. And it'll give you the exact price. Because sometimes I know if you do it manually, it's going to be kind of off, but this is going to help you a lot with confirming exactly where that low is. So you got to make sure that it's like right on point. Can't be passing it at all. If it passes it, then it's not going to qualify as an entry using that variation. Other than that, let's see. David said, cool new trick, thanks. Yeah, I don't really like using this tool because it kind of messes up like where you're trying to place stuff. But if you're looking for the exact price point, it helps a lot. I just turn it off when I'm done using it. And it helps with identifying where exactly the highs and the lows are. So you don't like kind of put it off by a pip or two, and then you accidentally enter something that you think crosses, but it doesn't necessarily cross it. Scrolling up real quick, let's see. Fahad said for the high-low strategy, if the high was invalidated, but there was a higher high before that one, would you take it? Yeah, exactly, Fahad. So Fahad was asking, like, say for example, you got a high right here, right? And then you have another high right here, but this high gets invalidated, or I mean, technically it qualified as an entry right there. So for example, right here, you have a high right here. This high broke it 1, 2, 3, 4. Actually, it wouldn't have, because this would be the fourth candle. So for example, right here, if this invalidates it, this is no longer the high. We move that high there, and we're now using this high. So let me see if price. And then again, right here, this high gets invalidated. So this is the new high. However, it gets invalidated again right there. So there's no high at that point. So yeah, going back over here, this is now the new high. Right over here. And as you can see, if price broke above there, you could have taken that for another long. And then you just make a later entry, and then you go full TP off that. So yeah, Fahad, you can use the as long as it's not broken. That's why sometimes you'll see me draw like multiple highs on the chart. I'll go back to like the farther one back here that hasn't been broken yet, right? Because there's a lot of highs here that haven't been broken. And I would just leave them on the chart until they do get broken. So like there's like a bunch of highs right here that have not been broken. So like, for example, you could have taken this right here because it broke this high, and then you could have taken this candle right here because it broke this high. So these are still valid until they're broken. And if they're not broken, then you can still use them. So for example, you could have taken this right here, and this would have been a full TP. And then you also could have taken this one right here because it broke this old high, and that would have been another full TP. So you can double up your winnings right there. Two separate entries, both full TP. And yeah, that's the key. The key is just making sure that they're not invalidated or they haven't been broken. Because if they become invalidated, then you just delete them off the chart, and then you just wait for the next one. And that's how some people, like sometimes you'll see people lock in like multiple trades, right? Like for example, for on the live, I'm only looking at the most recent high. So I'm taking like one trade here. I'm taking one trade that hits. But you look at other people here and they're like locking in like, you know, like Brian's locking in like 20 trades here because he has like all these highs that are still drawn up from like, you know, the session before. Because sometimes if you go back, so if you just zoom out, there's a lot of highs here that haven't broken yet, right? So you can literally draw like a bunch of highs here. And then when price breaks them, you know, there goes another entry right there. And that's something that you guys can do if you want. You know, obviously it takes more work, but you know, if you're really in the mood to make a lot of profit for that day, then you can put in the extra work and lock in way more profit. It just, you know, it really depends on you. That's why I give you guys different opportunities to take trades here. You don't have to just do the same way I'm doing. You can trade as many different ways as you want. It's just up to your risk appetite and, you know, how much you're looking to possibly profit. The main key is just not getting greedy, right? You guys got to stick to the plan. I know there's entries that come up over here, which is completely fine. You can still follow them, but you got to make sure that you're following that all the requirements are met. You're not like cutting any shortcuts, because if you do that, you know, odds are you're probably going to end up taking a loss. So other than that, Rav said, can you show the magnet thing again? Yeah, Rav. So for example, if you wanted to draw a low right here, right? So say, for example, you see this low, it hasn't been broken yet. You just click on this magnet tool right here. You click on your line, your horizontal line, and then you just go below it and click. And there you go, perfect line drawn right there at that low. Again, right here, if you want another one, same thing, right? Again, down here, this hasn't been broken, another one right there. This one hasn't been broken, another one right there. I mean, these are all invalidated, so you wouldn't have drawn that there. But when you're done, you can just unclick it, and then it'll go back to normal scrolling. Other than that, let me see if there's anything else that I'm missing here. All right, so I went over the entries that I missed today during the post live session for Randy. I pretty much went over the high-low strategy as well for you, Professor, but I can go over it again. Let's see if I can find an entry here. Nothing there, nothing there, nothing there, nothing there, nothing there. Let me see if I can find one here again. I guess this could be one, right? Or let me find a cleaner one just so like it can avoid any confusion that you might have. Okay, so here's a clear one right here. It's pretty clear. Let's go over here. All right, Professor. So let me see. I'm going to turn on the requirements right here for the high-low. So for the high-low scalp strategy, the first requirement is that you want to confirm the previous swing high or swing low. So we got a swing high right here. And the reason why this is a swing high is because you can see the high here has been established. You count 1, 2, 3, 4, 5 candles, and price hasn't touched it, right? So that's going to be established as a high. Again, right here we have a low. And the reason why this is a low is because same situation. We have a low established here, and there's been 4 or 5 candles, 1, 2, 3, 4, 5, that haven't broken past it. So this would be established as a high. This would be established as a low. With that said, you want to confirm price break and close past the previous swing. So for example, right here, we have a candle that breaks past it, and this is the previous swing high. So with that said, that's requirement number 1, requirement number 2. Requirement number 3, you want to confirm that you're trading in the direction of momentum. So for example, here, you want to go back and see what is the most recent momentum signal. Is there a sell here? No, so we're not looking for a sell, we're looking for a buy. Right here, we have a buy signal, there's nothing after it, so momentum is still pushing to the upside. Once you have those first 3 requirements, you want to make sure that price is not ranging or consolidating. Price was originally ranging and consolidating between here. However, this candle right here broke outside of that range, right? So with that said, that's going to be requirement number 4. Last requirement, you just want to make sure that price has not touched the previous swing before the break and close. So this candle right here broke and closed past it. All these candles prior to it never touched this high. So with that said, all the requirements are met, and you can enter this for a long position, right? You're going for about 100 pips right here. You let that run, and there you go, full TP. So there goes the breakdown as to like how the strategy would work. But yeah, know exactly how like Randy mentioned right there too. So Randy said it's a very large candle, not concerned about retracement. I would be concerned. I'm showing this as an example for the professor, just to show that this is how the strategy works. However, you know, obviously, before I would take this trade, I would weigh my pros and cons, right? Like I normally do. I weigh my risk parameters there. I'm like, okay, what are the odds of this pulling back down? And also, if I put my stop loss like a bit lower, where I normally have it about 300 pips, would this be enough to pretty much eat the pullback, right? So for example, here, I probably wouldn't have taken this because it's such a big candle, you know, comparing the other ones. Like if you measure this right here, this candle here would be about 160 pips. It's not really a big candle. It looks like a big candle compared to the other candles over here. But during New York session, this is not really a big candle, right? A big candle would be 200 pips, 300 pips, something like that. It just looks big here, but I mean, if you like let these run for a while and you just zoom out, it doesn't really look like a huge candle anymore because you're just comparing it to these previous ones. So I personally would probably not take this, but that's one way to confirm it. You know, you just have to understand how volatility is moving during New York session. I wouldn't really consider this a huge candle. It looks like a huge candle because it was moving slow prior to here. But if you look at the prior candles before that, like, so if you just move this to like this candle over here, it's pretty much the same size as the normal candles. It's just that these over here, volatility died down. So that's why, you know, if you look at all these candles here, they're all moving about the same. It's just, it was slow right here and then it picked up again right here. But if all the candles are moving normal, like how they were over here, you just move this over here and you'll be like, okay, like during the live session from 7 to like 8 when I was live, it's pretty much moving that way every candle. So it wouldn't really seem like a huge candle. But I mean, this is something that you'll pick up along the way. You'll start to realize, you know, what's the volatility during New York session. It's usually going to be about 100 to 200 pips per candle. Anything above that is an outlier. You know, like these candles right here, these are what I would consider huge. This is like a 500 pip candle or 600 pip candle. It's like double, triple move of that one candle there. So these I'd be really worried about. For the smaller ones, not so much, but it does take into consideration when you are looking to take, you know, these specific trades and whatnot. So other than that, Rav's asking, what does the magnet do different? The magnet sticks onto the high of that specific candle, Rav. So if you want to draw a horizontal line right there, you could be off by a few pips, right? If you want it to be exactly at that point, you turn on the magnet and you drag it to that point, and it goes exactly to that high. No, nothing higher, nothing below it. It's exactly at that high. So if you just want to be very on point with where the line is drawn, you use a magnet tool. If not, you don't need it. But that's exactly like why you would use it in those specific circumstances. Jennifer says, asking, when you say don't get greedy, you mean just don't let trades run past TP or stick to the strategy? No problem, Rav. I'm kind of confused with your question, Jennifer. So not getting greedy is, it means both of what you asked about. So the thing is, if you're letting a trade run past where it's supposed to go, you're getting greedy, right? Because you want to get more profit. For your second thing, you said stick to the strategy. That's also getting greedy because you're trying to enter a trade before all the requirements are met. So yeah, being greedy would reflect both letting the trend, because if you let the trade run past TP, you're still not following the strategy, right? The strategy is there for a reason. All the requirements have to be met. And then with regard to TP stop loss, we don't have a set TP stop loss. So whatever you have set, that would be for your strategy, right? So for example, here, this isn't going to be the exact TP stop loss, but I'm just going to put it here. So, you know, for you, if you want to go for TP stop loss of 100 to 100, right? That's going to be your strategy right there. If you go anything away from the strategy, then that would be considered greedy. Because like, for example, if you know you're supposed to pull out at 100 pips, but you're going for anything past that, then you're getting greedy. For example, if your stop loss is set to 100, but for this one trade, you decide to change it to 200, that's being greedy as well. So answer to your question, to both of your questions is yes, both of those are being considered greedy. Going anything off track of what you plan, because every time you go into a trade, guys, you have to like understand where your TP stop loss is. I don't want you guys to ever enter a trade and not have a TP stop loss in mind. Like for example, every time I take a trade, it's almost going to be always 100 pips TP. And then my stop loss is almost always going to be either 200 or 300. And the reason I have it set at that is because volatility is very high. Sometimes you'll have a pullback, just like we were talking about earlier, and you just want to be able to handle that drawdown or pullback before it swings back in your direction. So yeah, I mean, yeah, short answer to your question, Jennifer, is yes. Anything that goes off of what's predetermined before you enter the trade is going to be considered greedy, because you have a plan for a reason and you should always stick to the plan. That's how you guys can be consistent. Because I'll see people sometimes, like this is what I see happen a lot. Let me see if I could find an example. And I'm sure this is gonna resonate with a lot of you guys, because I see this happen like all the time. I'm looking for an entry that has like X amount of drawdown. Okay. So we'll use, I want to use like a decent example where it's not like too obvious. Okay, like it usually plays out well when you get into like these areas where price kind of consolidates a bit. I'm looking for a consolidation area, because this is usually where it'll test your trade psychology. Let's see if I can find one here. I'll just use this as an example right here. So this would be a pivot scalp entry using the strategy right here. So for this pivot scalp entry, I always use the same TP stop loss, right? So what I would do here is if I saw this pivot scalp entry, I already have my TP stop loss set at this moment, right? Because I already have my strategy is predetermined. I already know exactly what I'm looking for. I want this move here. Once I get out, I get out. What I see a lot of people do sometimes is they try to tighten their stop loss. They have it set to like, which in some instances it'll work, but it's not a good habit to have. Like for example, here, if you have your stop loss set at 100 pips and you're like, price starts dropping, you're like, oh, I'll just drop it down a little more, right? That's what everyone does. They're like, I'll drop it down a little more. And then it would have hit TP. But the thing is, I already go into this trade with this setup because I already know how price is going to move. I know price, if it is to pull back, it'll pull back X amount of pips. So I have my safety net down here. I don't expect to lose the trade, but I come in with a plan. What happens with a lot of people is they'll have like a tight stop loss. And I always warn you guys not to have a tight stop loss because of a specific reason. But you'll see people when it goes into massive drawdown. And let me show you another example here. So see how far this dropped. I need one where it gets close to like 300 pips, but not necessarily okay, so this is like an example right here. I know this isn't going to be an entry. I'm going to take this off just so that I can show you guys. I just want to show you guys an example of like what a lot of people do, and I see happen all the time. This is not necessarily an entry for you guys, but I'm just going to show you what a lot of people do a lot of the times. So what happens is you go in with the trade and you have your stop loss set at like 200 pips, right? And then price gets close to it. Price will get close to your stop loss, whatever, and you're like, okay, I'm going to move it down a little more. And this is what happens all the time. If you guys have a plan to keep your stop loss at 200 pips, leave it at that. If you take the loss, eat the loss and move on to the next one. But what happens is people keep moving their stop loss lower. Like for example, right here, they have their stop loss at 300 pips. Instead of just taking that loss, they just keep moving it down lower. They're like, okay, I'm gonna move it down another 100 pips. And then it keeps dropping. Like, I'll move it down, another farther down. And this is how people blow their accounts, because you go in without a plan and you're already willing to lose this much, but you just keep moving your stop loss lower and lower, and you end up losing like double what you could have just lost if you just took the loss there. So this is something that a lot of people need to like take into consideration and stick to your plan, because as long as you guys understand your risk properly and you guys know when to pull out of your trade. I know, for example, here, this would have hit TP. But I'm just using this as an example for people who just don't have a plan. They'll go in and they'll keep adjusting their stop loss, or they'll keep adjusting their TP. You know, same with like what let's see what I got over here. You know, I'm trying to figure out what you sent me right now. Let's see if I can pull it up. Nice. So these are your props for today, Noel. Great work right there. So Noel locked in a total of 1,775. Yeah, 1,775. Nice work, Noel. But you know, going back to what we were just discussing earlier, Noel, you know, if you decide to let your trade run right here, instead of taking your profit at 100 pips and you just let it run longer, it could easily just like reverse on you completely. So that's why I don't really recommend you let trades run like that. But definitely great work on your consistency today. Because I know we talked about, you know, your consistency, you had issues with that, but I'm glad to see that you've bounced back from it right here. So you're doing pretty good today. I'm not sure if this is like your entire account or if it's just today, but you're doing really good. Because I know you were kind of struggling for a bit, but I did see you, you know, you took the information that I gave you and you use it to your advantage to bounce back. So great work right there. Nice. Just for today. So you're up 900. That's great, Noel. Because I know you've been having like back and forth, but I'm glad to see that you found some consistency with that move right there. Other than that, let me see if there's anything else that I'm missing here. Yeah, no problem, Professor. No problem, Rav. The other question here was from, I already went over the variation. So I pretty much went over all the questions so far. The next question here is from Henry. Henry wants me to take a look at your USD. So if you guys have any other questions, you know, feel free to drop your question in the chat. We've been on the session for about an hour now, so I'm probably gonna get off in a bit. But if you guys have anything specific, anything that needs to be answered right now, let me know and I can cover it. You know, I want to go as in detail as possible with you guys today. But don't worry, if your question doesn't get answered today, we're going to redo this again next week. Because I know only half of you guys can make it today. And we're going to do another mentoring session next week. So I want to make sure that you guys are like 100%. There should be no reason for you guys not to be successful in K2, guys. You guys see everyone else doing really well. And I want to help you guys get to that point. But, you know, the thing is, I can't help you if you guys don't ask the questions. I know a lot of you guys don't want to bug me. You guys feel like you're bugging me. Which, I mean, it's okay, guys. You guys can ask me whatever questions you guys need help with, and I can help you guys get to that point. But, you know, you're not going to get any better unless you guys get the help that you need. So let's go to your USD real quick for Henry. So Henry, let's take a look at your USD. So I'm going to give you guys a breakdown of how I analyze not just Forex pairs, but how I analyze anything on a wider scale. On the scalps, you don't really have to analyze the entire market because you're looking at what's happening right now, right? You don't really care what's going to happen in an hour, 2 hours, 4 hours, a day from now, because the thing is you're trying to catch those little moves within the first couple minutes. For Forex, if you're trading on the 4-hour time frame, this is going to pretty much break down exactly what I do whenever I analyze anything. It doesn't have to be on the 4-hour. I can analyze the same way on the 10-minute if I really wanted to, but it's not really going to make sense because the market is so back and forth on those shorter time frames. So looking at your USD right here, Henry, hopefully you're still in this room. Let me see. Yeah, you're still here, Henry. Okay, perfect. So I'll analyze this from you. The first thing I'm going to do is I'm going to turn on the K2sr indicator version 2. Once I have this drawn up, I'm going to draw my zones. So I'm going to draw my zones right over the K2sr zones. So we have one right there. We have another one right here. Have another one right over here. Whenever these overlap, I just create one big zone. So you can see this zone right here overlaps with this one below. So I'm just going to draw this a little wider. We have another one right over here. We have one more right over there. We got another one right here. And then we got one down here. So in this situation right here where we don't have a lower zone, what I generally do is I go on the higher time frame. So this is the 4-hour. I'll go on the 8-hour next. And what I'm looking for is just that lower zone right there. You can see that your USD hasn't been down here in a long time. If you zoom out, price hasn't been down here since July of 2020. So it's been over a year since price has been down here. So if we don't have one on the 8-hour, I'm going to go on the daily. If we don't have one on the daily, I'm going to go on the monthly or the weekly actually. So weekly first before I go to the monthly. So looking at current price right here, you can see that the next zone is actually going to be way down here. And one thing that you also want to keep in mind that there's a zone right over here as well. All right, so going back to the 4 hour, these are our zones. I'm going to go and turn this off, and then you guys can see that this would be the weekly zone right here, and the next zone is going to be way down here. So price is pretty much an open space at this point. What I do after I draw these zones right here, and if you can see over here, you can see how once we draw this, it creates a storyline, right? I mean, obviously you can't see down here because price is currently so far below. But if you go back to where price was like about a month ago, you can see there was a storyline. Price came down, consolidated a bit, came back down, consolidated a bit, came back up, consolidated a little bit. And you can see that price breaks into these other areas, right? So for example, here, you can see like this whole area was an area of consolidation, right? It broke up right here, another area of consolidation. So as you can see, a lot of these pairs, especially the Forex pairs, they break into patterns. Sorry, my MC4 just logged off and logged back in. It goes in consolidation, breaks out, and consolidation, breaks out, consolidation, and it does the same pattern over and over again, right? Looking at current price right here, same thing, right? Price came down, consolidation. Broke down again right here, consolidation. Broke down again right here, consolidation, right? Price broke again below here. What do you think is going to happen next? Consolidation, right? It's the same pattern. It just repeats itself. That's why these zones are important, especially when you're trying to figure out what's going to happen next. So if price goes into consolidation right here, what's going to happen after that, right? It's going to break out to the top side or it's going to break down to the bottom side. My guess is that, well, I'll get to my guess right now. Hold up. Let me just delete this stuff. Probably I can leave it up, doesn't really matter. So anyways, looking at current price right here, once I have these zones drawn up, what I do next is I try to determine what the bias is. So I'll turn on my trend meter here. We have a sell bias. I'll turn on my pivots here. Price is below the pivots. It's another bias, right? So my guess is that price will probably go sideways a bit, pull back, and then come back down. I think that's kind of what I see happening here. Or that might not even happen. What might happen is because we have Black Friday coming up and we have Thanksgiving coming up. So this might consolidate for a bit. I think we do have some news coming up on, let's see, tomorrow's Thursday. So we do have Euro news coming up tomorrow morning, actually. So with this news, it's ECB President Lagarde speaking. This can easily push price one way or the other. So it's a bank holiday for the US. Depending on what happens with this news event, US market's going to be closed. So what might happen is this might drop even further, actually, because with the US market closed, you know, there's still going to be movement on the Euro side. There's not going to be very much movement on the US side. So there's just different things that you can add up to here or to like to determine, you know, where price is going to go. But that's where the confluences come in. So for example, here you have a sell bias with regard to the trend meter. You have a sell bias with regard to the pivots. Turning on the momentum indicator, we got a sell signal right here as well. So if you were to apply the K2sr strategy, technically you'd have a running trade right now, which would be right here. Your stop loss would be at the previous swing, which would be somewhere around this area. But you know, to be safe, you probably want to have pretty wide, especially during the holidays. So my bias here would be for a sell, Henry, right here. However, because tomorrow's a holiday, I wouldn't be in this trade. I know this trade came up right here, but it's still not one that I would take. You can see other examples here for when this trade did come up prior. There's another one over here. So you can see how price, we had a sell signal, it broke and closed below the structure. And the strategy that I'm going over right here is going to be the K2sr strategy. So basically, I'll just replay this from this area here and I'll show you exactly what we were looking at. All right, so basically for this strategy right here, you want to confirm a breaking close past the K2sr zone. So right here, you can see that price broke and closed past the zone. And you want to confirm the direction of momentum. Right here, we have a sell signal. That's going to be requirement number 2. Requirement number 1 right here, price broke and closed past the K2sr zone. So you enter on the open of the falling candle, which would be right there. Stop loss would be at the previous swing above here. And your TP would be down here at the next zone, right? And if you guys have been with K2 for a while, you guys already know the strategy because this is the one that we used to apply before we moved to scalping. And if you let the trade run from there, that's pretty much the strategy. And then it pretty much moves its way all the way down. So again, right there, there's another entry below here. Same strategy. So full TP off that. Again, right here, you see how price breaks and closes below the structure. That's requirement number one. Second requirement, confirm the direction of momentum. We have a sell signal right here. You do the same thing. Enter a sell entry right there. Pretty much ride this to the next zone, which would be right here. And if you were to let that run, another full TP there. So that's pretty much my analysis for this. And that's why I would anticipate this to be another sell over here. But the reason why I'd be wary about taking this sell here is due to the fact that it's a holiday tomorrow. So with a holiday tomorrow, price might move a little iffy. And also there's, medium impact news with ECB President Lagarde speaking. And then again on Friday. So he's speaking tomorrow and he's also speaking on Friday. You don't know if that's gonna be a good thing or a bad thing. So I would probably sit out of this, Henry, but my bias would still be here for a sell. If you're like wondering, exactly what's going to come up. Yeah, funny. I will see you tomorrow, or we'll see you later. Yeah, because iPhone 6 got work. Watch the rest on the replay, definitely. So give me 1 second, guys. I'm going to step away for 1 second real quick, and I'll be right back. All right, I'm back, guys. Sorry, I got some water. Jennifer, just message me your username for Telegram or for TradingView, and then I'll check in the system. So I'm pretty sure you have access to it. I'm not sure if you like looking in the proper place. But just message me on Telegram, your TradingView username, and I'll check the system once we're done with the session. I can't check it right now because we're on live, but I will check it right after. Henry's asking what's my TP stop loss for Euro USD. I don't have a TP stop loss for it right now, Henry. I wouldn't put it, well, I mean, technically your stop loss in TP could be here. You go for about 70 pips. However, I wouldn't recommend putting it in there. I wouldn't be taking this trade, and I wouldn't be like for this trade here, you can technically have an open-ended TP because technically you can probably shoot to down here, but this is probably not going to happen like tomorrow, right? This will probably happen like within a week or maybe a couple weeks, or maybe even a month, because Forex moves a lot slower compared to indices. So technically, when I would trade this strategy, I would use a 1-to-1 risk reward, right? So if my stop loss is at 770 pips, my TP would be at 70 pips as well. So you can technically put this as your TP stop loss. However, if price breaks below here and you want to ride it all the way down, when price reaches like halfway to TP, you can just move your stop loss and profit and then just let the trade run to the next zone down here. There's different ways to run your trade for these because these are longer moves. Generally, this is how I used to trade, longer moves for intraday and swing, but it just depends on how you want to take it. So I would probably put it here for 70 pips, Henry, if you want to. And the way I figured this out is that I put my stop loss right here at this previous swing. If you want to be really safe, you can have your stop loss even farther up here. It just depends on your lot size, right? For me personally, I don't like holding trades for that long. So I would try to get out right here, right? I would probably use like a standard lot, make like $700 off this trade. If you're using a smaller lot size, you can probably go for the bigger move. It just depends on how you want to trade it. We both trade differently. So if you want to go for a smaller move, this would be fine. If you want to go for the bigger move, you can just adjust your stop loss as it moves down. So like say, for example, say for example, price moves down to here, right? Price moves down to that point, you can move your stop loss and profit, and then you can just trail your stop. So like say for example, price comes down, comes back up, and comes back down. And what you can do is you can just have an open TP and just move your stop loss lower. So as it continues to drop lower, bounces around, move your stop loss lower, comes down further, and then you can try to catch the entire move. For me personally, I don't like holding trades for that long. And if you're trading on FTMO, you can't even hold trades into the weekend. So that's why like I kind of had to change the way that I traded. I know before I used to trade intraday, but now that I've been doing FTMO, you can't hold trades over the weekend. So that's why my bias from like the type of way that I trade changed a bit, because I started trading on FTMO. For example, if I could trade over the weekend, I would hold it longer, but I can't. So that's why I'm more focused on scalps now versus doing this. But these strategies still work perfectly fine. It's just it doesn't work with the way that I trade now, since I'm more focused on FTMO than my personal account. But good news, guys, I signed up for MFF, so we'll try to get funded on MFF for like their max, which I think is like 600K. And then I also funded my personal account as well. So I'm going to be running like a lot of accounts. I mean, my account's obviously not anyone else, but I'm going to be a lot more focused on my trading versus necessarily looking for people to join K2. Because I haven't really advertised K2 for like the past 4 or 5 months because I've been really focused on my trades. And now that my consistency has been really good, I mean, you guys have seen my consistency. I've been killing it literally every single day, like literally no losses. So what I'm doing is I'm just funding a bunch of accounts and signing up for other prop firms and, try to make the best of it that way. So we'll see what happens next. Henry's asking if I've seen E8 prop account. I've never seen them before, Henry. I mean, I could pull them up right now. Let's see. E8. Let's see what you put here. E8.com. I went to E8.com and nothing came up. Okay, E8 funding. I'd be careful about going to these other funding companies, because what I see happen a lot is everyone is trying to find the best funding company, right? But they can't even pass FTMO. The thing is, if you can't pass FTMO, guys, that's gold standard. You probably can't pass the other ones either. So I've never heard of E8. It's not one that I would necessarily try yet. See. Gotcha. Okay. So Alan said E8's based out of Texas. You also have an office in Dallas. Yeah, if they're based in the US, that's better news. That's one that I would like to trade with. I've never seen them myself though, so I can't really say if they're good or not. Yeah, I do see that they have an office here in Texas, but I've never looked into them myself, so I'm not really familiar with how they are. Or like whatever however they run. So I'll probably keep it in mind and I'll look into it at some point. But for me, the gold standard is still going to be FTMO. I just started doing MFF recently because a lot of people have been doing it. I've done one account, so I opened up a 200K account. I'm gonna see how that goes. If I like it, then I'll sign up for 2 more accounts and I'll just merge that into a 600K. Then at that point, I'll have basically 1 mil in funding, across different companies, and then maybe I'll do this too, if it's legit, right? The reason why I'm really like worried about taking this is because I did funding talent with you guys. I like never recommended funding talent. I told everyone not to do it, and then I finally decided to do it, and they ended up being a scam, right? So like my whole way of like seeing them as possible scam, they really were a scam. So that's why I'm not really looking to do any other funding companies until I like know that they're really legit. But I don't know. I don't know anything about E8 right now, so I'll keep an eye on them. I'll probably keep this on the back burner. If MFF plays well, then I'll probably stick with MFF for a while. But I'm still gonna be on FTMO. FTMO is always gonna be my main one, but I'll see if MFF is good, and then if E8's good, then maybe I'll take a look at them as well. But there's no rush for me to get funded on all these companies. I just want to stick with what I know works and what I know is legit. So other than that, let me see if there's anything else here that I'm missing. And yeah, Rav has one question too. Let me check what you had here, Rav. All right, another question with Ravs is asking, also with the high-low strategy, we still need to take fundamental into consideration. So going back to the high-low strategy over here. So Rav, the fundamentals are not going to be necessary, but they are going to be an extra confluence, right? So for example, like I was mentioning before, like this morning, there were some high-low entries here that were available for a buy, but we didn't take them because let's go back to the 8 o'clock. So there were some high-low entries here that were available, like for example this one right here, right? The bias was a sell, but there was an entry here that was available for a buy. So for example here, the bias was a sell, but a buy came up here, right? The fundamentals aren't a requirement. It's just an extra confluence. So for example, here, you could have taken this if you're okay with risking, going against the bias. So if you wanted to go against the bias, you could have taken it and it still would have hit TP. However, me personally, I probably wouldn't have taken it because I don't like losing trades. So even though I know it's a valid entry, I wouldn't have taken it due to my risk tolerance, right? I want to trade in the direction of the fundamentals. So for me personally, I wouldn't take it. But I know some other people did. If you look at the profits here this morning, there were a couple people here who took buys. Like Brian took buys here because he did see the entry and he was okay with the risk analysis, right? He was okay with taking the buy. So he took the buy here, made profit off it. Great. Me personally, I could have taken it, but I personally would have taken it myself. So it's really up to your risk tolerance, right? If you want to take it, you can. But if you want to trade how I do, just more focused on quality trades and consistency, then even though this would have been a winner, I would have skipped it myself. So yeah, fundamentals aren't required, but they are an extra confluence if you're looking to look for like the best possible entries available. Other than that, yeah, Alan said that Mark's involved with E8. That's cool. Yeah, no, if he's involved with E8, that's great. I mean, that's probably why maybe his group is using it, but it's not something that I would recommend personally until I'm like familiar with, right? I never recommend anything to you guys unless I'm like 100% confident in what they have to provide. Like FTMO, I've been using them for years and they've been paying out every single month, no problem. So that's why I recommend FTMO. MFF, I haven't used them yet, so I can't really recommend them to you guys. Even now, even though that I signed up for an account, I'm not going to recommend it to you guys until I get a full payout and everything is running smoothly for at least a couple months. So I just want to make sure that you guys are fully aware of like the risks when you guys try to run with a company that hasn't really been established yet. Let me go to the E8 website again. I'm like curious when they were even started. Yeah, and one thing that you guys want to keep in mind is you guys want to make sure that the company's been running for so they just started in 2021. That's another red flag there. I don't like trading with companies who are brand new. Because the thing is, there's so many different funding companies out there, and you don't know how long are these companies going to be around for, right? Like Funding Talent, people thought that company was going to be around forever. They blew up after like a year. FTMO has been around for like quite a bit, so that's why I still trust them as a legit funding company. These are actually kind of cheap too. I don't know what's the difference between the Elevate and Supercharge, but yeah, that's crazy. This actually sounds pretty cool. It's like a Supercharged proprietary account, increase your balance by 100K every month, achieving the profit objectives. Yeah, curious what the objectives are. But yeah, no, I'll take a look at this, guys, and I'll see. I don't know, maybe I'll ask Mark some questions about it. But all in all, this isn't something that I would hop into just yet. I mean, if you guys want to try it out, feel free. You guys can give me your opinion on it. But I'm definitely going to be a little careful with like what funding companies I would recommend to you guys. So other than that, let's see. Okay, Jennifer's asking if the London session is half TPS also. So London session will vary, Jennifer. I mean, you have to gauge the market to see how it's moving because the London market is actually a lot quicker. So like what you can do is you can go to the London market, or what I would recommend is just trade something different. Don't trade a US asset during London session. You should trade a London asset like the DAX or UK 100. Those are the main ones that people trade during London session, but because the thing is, the market is going to move a bit quicker during London, but it's not always going to move quicker, right? So for example, when the market just opens here at midnight, which is my time, this is London open. When London first opens, the market isn't that volatile for US 30. The thing is, London overlaps with New York. So you can see from here up until here, market is kind of like slow. It's like slow moving from like an hour open, right? Once you get 2 hours into market, it starts to pick up a bit, right? So your TP stop loss is gonna depend on which you want to set it to, because we don't have a TP stop loss that's even set up to begin with. This is something that you have to figure out, you know, if you're going to trade a different session. If you're trading a US asset during a different session, it's always going to be different, right? It's always going to be faster in US session because that's its actual session. But if you're trading during London, it's going to be quick, but it's not always going to be as quick. So like, for example, here, it's kind of slow during midnight or the first hour of market open. An hour and a half in to 2 hours, it starts to pick up heavily because the crossover happens here around 5 o'clock. So you probably want to use a full TP stop loss for London. But, you know, like I mentioned, you have to go and figure out what it would be with regards to the conditions for that day, because the market isn't always going to be the same. Like if you go back to London from yesterday, I'm not sure if it was moving fast yesterday, but so if you go back, so you go back another day, right here at midnight, it was a lot faster, right? So it's not always going to be the same, but it's going to be a lot faster than Asia session. So you got to figure out like what it would be for you. I never recommend anyone trade during London, but if you want to trade, it's still viable. Like there's still entries available during that time, but it would just depend on how the market's moving. You can see here, it's moving a lot faster than it did yesterday. So you guys can see the range from this point, from market open to an hour later, it moved 1,400 pips. Last night, not so much, right? Move like 600 pips. So you can see that the day varies, Jennifer. It just depends on like what day you decide to trade it on. But you would have to, you know, gauge the market. I personally wouldn't trade right on open. I'd probably wait like an hour and a half or 2 hours later, because you can see the market starts to pick up a lot more as it gets closer to New York session open. So yeah, I mean, it just depends on you, but I would probably recommend trading something else if you want to trade during London, or at least like for that opening session, right? From the opening session, maybe the first 2-3 hours, a lot of people trade the DAX, some people trade the UK 100. And then as it gets closer to like 2 a.m., 3 a.m. my time, when it gets closer to the crossover, that's when people start to trade US 30. I know the best time that I see a lot of people trade US 30 is like from 4 o'clock my time to 6 o'clock. So that's like, I don't know what time is it for you, but Pacific time, I see a lot of people trade pre-market 4 o'clock to 6, and they have like really good entries during that time period. So maybe something that you want to look into. Other than that, guys, I think that's it for today. I've been on the session for a little over an hour and a half. So I think that's it for now. If you guys didn't have your questions asked, that's fine. I mean, didn't have your questions answered, that's fine. And if you guys don't have questions yet, that's cool. Take what you guys learned from this session, come back next week for the next mentoring session, and we can answer your questions deeper. Because I mean, right now, this was kind of a last minute session. I just wanted to hold one for you guys because I did promise one for you guys a while back. We just kept getting pushed farther and farther behind. But yeah, I think that's it for now. If you guys do have questions, you know, feel free to reach out through email or Telegram, or if you guys want to just hold those questions for tomorrow. So guys, tomorrow, I don't think I'm going to have a live session because the market is going to be closed. So probably no live session tomorrow, but the live session will be on Friday when the market does reopen. So if you guys do have questions, hold it till Friday. If not, just hold it till the week after when you have another mentoring session, and then we can go into detail with any questions that you guys have. So hopefully you guys grab some value out of the session, and hopefully I was able to answer all of your questions here. Otherwise, I will catch you guys back here likely on Friday. And then if I miss you guys on Friday, then I'll see you guys next week on the new trading week. I think next week after that's going to be December check the calendar real quick. Yeah, the following week is going to be first week of December. So it's going to be, or actually next week's going to be first week of December. So we'll see how that goes. But yeah, guys, happy Thanksgiving to everyone. Hopefully, you know, you guys have a great Thanksgiving. If you guys are in the US, I mean, you guys are probably not going to be doing anything, but definitely for you guys here in the US, happy Thanksgiving to everybody. And then we'll pick back up on Friday. So have a great week, guys. And I'll see you guys on Friday morning. So definitely, guys. And yeah, definitely. It's a grateful to thank